In this episode, we're talking with Cameron Kusher from the REA Group, and we're going to explore the insights that Australia's biggest property portal is able to gain from its user activity through the lens of an economist. What are buyers searching for and where? Are listings on the rise? And if so, where? And how does this all translate into transactions and ultimately prices? Essentially, we want to lift the lid and look under the bonnet of the property market in this episode.
Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent and buyer's agent mentor, co-host of Foxtel's Location Australia, author of Auction Ready and co-host of Your First Home Buyer Guide.
And I'm Chris Bates, mortgage broker, recently ranked number 5 in Australia out of over 18,000 brokers in the annual MPA Top 100 Mortgage Broker Awards. Before we get started, I need to let you know that nothing we say here can be taken as personal advice. We always recommend you engage the services of an appropriate and experienced professional.
Our guest today is Cameron Kusher, the Executive Director of Economic Research at REA Group. Cameron's 20-year property sector career spans valuations, property development consulting, commercial property research, as well as residential property research. And he's seen as a thought leader on housing market trends, as well as broader economic trends, particularly those that impact the housing market. Now, Cameron, it is really great to see you again. It's been way too long. We always enjoy our chats with you, so welcome back.
Thank you for having me.
Cameron, obviously it's late September. Someone listening to this is probably it's middle of October. But how's spring shaping up from REA's point of view? And is there any surprises in terms of listings? Have you seen a change in sort of search data and buyer behaviour just in the last few weeks? I mean, what's REA seeing? I mean, you've got some of the best data in the country, to be honest.
Yeah, look, we're seeing quite a good increase in the number of listings. We're not quite at the end of September yet, but looking at sort of the daily data through September, we are seeing a ramp up in listings. And it's not just in Sydney and Melbourne anymore. We're starting to see more stock coming to the market. I think there's a few reasons for that. I think a lot of people were anticipating that interest rates would be cut later this year, and that's looking pretty unlikely now. So maybe some people that are holding out hope that we were going to get those cuts are now saying, well, I can't hold on for another 5 or 6 months, and they're looking to move on. But I think one of the big things that's really changing is actually in the rental market. We know that a lot of people, when they sell a property, need to transition through the rental market. And that's been a really big challenge over the last couple of years because there's been no availability of rental stock. We're finally starting to see a bit of an increase in rental stock availability as well. And I think that's giving people confidence that, okay, I can sell, I can continue to rent somewhere close to where we're living at the moment, and then I've got a bit of an opportunity to buy. So I think that's another thing that's starting to drive more stock onto the market. And then, of course, even though we don't have interest rate cuts coming this year, at least not seemingly, it's looking less likely that we're going to get interest rate hikes. And I think most people are expecting an interest rate cut early next year, followed by several other cuts throughout 2025. So again, perhaps people are starting to position for that.
It's I love that quick snapshot of some of the drivers of what's happening in the market at the minute. We definitely want to unpick a lot of those things, right? But before we do, I'm curious because spring is selling season, right? That's the agents put it out there, get your house on the market, the daffodils are out, blah, blah, blah. But as a buyer, I know that spring is buying season, and I like the fact that sellers think it's selling season. And so there is a typical spring market, I would imagine, in the whole country to some degree would follow this pattern. So I'm keen to know, I guess, from your position, what is that pattern and how is this year, is it tracking it or is it differing in any way?
Yeah, what we usually see in spring is that the number of properties coming to the market ramps up, starts to ramp up late August and then through September, October. And then once you kind of hit Melbourne Cup Day, it starts to ease off there. Now, auction activity is still pretty strong right up until the week before Christmas, but we don't continue to see the number of properties coming onto the market. I think your point there about it being buying season is really what it's all about. Yes, there's more listings, but that obviously gives people wanting to buy a property a lot more choice and a lot more opportunities to buy. And even though there's a lot more properties going to auction, we also tend to see auction clearance rates easing. We tend to see a little bit of an increase in days on market because people don't have that same fear of missing out that they do when there's not much stock on the market. So if we look at what's happening this year, though, we did see a big increase in new listings in August, much bigger than what we usually see. So again, maybe people are trying to get into the spring selling season earlier this year than they have in the past. That's certainly something that we've witnessed. Auction clearance rates and auction volumes have been pretty strong so far. Again, we're not even quite yet a month into spring. We're still seeing a lot of inquiry out there, but again, talking to a lot of real estate agents over the last month, there is a sense that buyers are being a lot more selective. And again, I think that comes back to the more stock being available. And also some of the feedback I've had is that the volumes of people coming to open homes and the numbers of registered bidders are actually down a little bit as well.
So that would be predominantly Sydney and Melbourne where you're looking at that auction data, and Brisbane to a degree, but Brisbane's still not what you call an auction capital, is it?
No.
And so what are the things that are happening in other cities then or other locations where then you can't sort of read the auction data in quite the same way?
Yeah, so if we look at places like Perth and Adelaide, I mean, those two markets have seen the biggest increases in prices over the past year. So to give your listeners an understanding of how much prices have increased, so in Perth over the last 12 months, prices are up more than 23%. In Adelaide, they're up more than 15%. In Brisbane, they're up about 14%. Sydney, you've seen price growth of around 6%, whereas in Melbourne, prices are down about 1.5%. And I think the main reason why we're seeing this divergence in the performance or the price growth really comes down to supply. If you look in Sydney, for example, the number of properties on the market is 13% higher than it was a year ago. In Melbourne, it's up 15%. In Brisbane, though, it's down 3.8%. In Adelaide, it's down 14%. And in Perth, it's down 20%. So you've got this kind of tale of in Sydney and Melbourne, you've got more choice. Buyers have got the ability to be a little bit more selective. They can wait. There's quite a lot of stock coming onto the market every single week and every single month. So I think people are going, well, I like this property, but if I miss out, not the end of the world because something else is going to come onto the market. On the flip side, you go to Perth, Adelaide or Brisbane and people start looking for properties. There's not much available. And then there's not much coming to the market on a regular basis either. So it's almost like if you find something that's good, you've really got to try and get that because if you miss out, it could be several months before something else comes onto the market. And, the prices could have moved 5, 10, 15, 20% higher than what they are now. So you've certainly got that higher level of desperation from buyers in places like Brisbane, Adelaide and Perth and, less desperation in Sydney and Melbourne. And that really is a story about how much stock is on the market and how much stock is coming to the market.
Are you seeing, the data that you have that not many other people have, right, is around what's, search data basically, what people are searching, how many times they're looking at properties, are they making inquiries on properties, how many people are just window shoppers, etc. Like, there's some other people that have got that data, but nothing like REA have. Have you seen, is there anything that you can sort of provide over the last few months? And, that's so much pent-up demand in property markets that people don't realise, right? And, a little bit increasing confidence. We've absolutely said on a mortgage broking point of view, more people come to us over the last couple of months. But does that correlate with search data? Are you seeing more, urgency there?
So we're seeing a lot more search volumes. We're continuing to see more and more users coming to our site.
Okay.
I think we hit a record high number of users in August, I think, which is our latest data. In terms of the buyers, so the way we kind of look at demand is looking at the number of inquiries per listing. So if we look at inquiries per listing, they're pretty much flat from where they were 12 months ago in the capital cities. Interestingly, they've actually increased a little bit in the regional markets. Again, geographically, that's all very different. So inquiries per listing are lower in Sydney and Melbourne than they were 12 months ago. They're higher in Brisbane, Adelaide and Perth. And then if you look in regional areas, they're lower they're stable in regional New South Wales. They're lower in regional Victoria. They're quite a bit higher in regional Queensland. And they're marginally higher in regional WA and regional South Australia. Then you go to the smaller capital cities. Inquiries are up in Darwin. They're up marginally in Hobart. They're down in Canberra. So it is really a bit of a mixed bag. I think one of the more interesting things I've started looking at is taking all of our inquiries and taking all of our listings and matching up, where there's a mismatch between the volume of inquiry and listings. And, when we look at this across the nation in terms of houses, what we're seeing is, a bit of an oversupply of 2-bedroom houses on the market and a bit of an oversupply of 4-bedroom houses. But on the other hand, a bit of an undersupply, relatively speaking, of 3-bedroom houses. And I think that speaks to the price sensitivity of buyers at the moment. They probably want a 4-bedroom house, but that's outside of their price point. But 5-bedroom houses, there's also a mismatch as well. And I think that speaks to a couple of things. Firstly, there's some people that aren't really being impacted by higher interest rates, or certainly not to the same magnitude. Probably a sense that we want more space because we're working from home. I think an increasing consideration for buyers as well is, it's expensive out there. My kids, they might be teenagers now, but they could be living with me for another 10 or 15 years. So I need some space. That's kind of what's happening in houses. In the unit market, we're definitely seeing a bit of an oversupply in the 3-bedroom market.
Really?
Yeah, and that's both in terms of brand new properties, but also existing properties.
Wow.
And then the 1 and 2-bedroom stock, we've been seeing a bit of an undersupply of that. And again, I think we know that investors are coming back into the market. We know that not a lot of new 1 and 2-bedroom stock is actually being delivered. So people are increasingly looking for second-hand 1 and 2-bedroom apartments.
I mean, of course, this is across the country because, and there is no one property market, as we all know, because, I'm thinking particularly with the 3 bedrooms and the 1 bedrooms in Sydney right at the minute, it's like we think it's the opposite.
Yeah, so Sydney's the one that's really the outlier here. We are seeing 3-bedroom stock relatively undersupplied compared to the amount of stock, to the amount of inquiry. Whereas you go to Melbourne, you go to Brisbane and you go to Adelaide and Perth, there is an oversupply, relatively speaking, of that 3-bedroom stock.
That's interesting, isn't it?
Yeah.
I mean, I can see Melbourne because, from my sort of perspective, my take on that is 3-bedroom apartments rise in popularity when the houses become expensive usually in urban areas, right? And Melbourne's obviously there's sport for choice at the minute. That it's an easy place to buy compared to what it has been in the past or what other cities are at the minute. So that sort of answers Melbourne. But in terms of Brisbane, the other cities, I'm sort of a bit head scratching around some of that.
I think what is happening in some of those other cities. So there's typically probably not been as much 3-bedroom supply.
Right,
so
yeah.
in the established market, there's just generally not as much of that 3-bedroom stock. And a lot of that 3-bedroom stock has kind of been penthouse apartments. So it's not necessarily price pointed. Whereas in Sydney, you go out to the western suburbs, there's a lot of 6-packs, 12-packs with 3-bedroom apartments that are actually representing pretty good value these days, especially if you compare it to buying a brand new 3-bedroom apartment in Sydney at the moment.
Yeah. Do you think there's anything on the horizon? Actually, before I ask you that question, going back to Perth, I think it's really fascinating that you've got a shortage of listings when you've got such rapid price growth. It's obviously easy to sell properties, and there's they've come out of a period of 10 years of pretty horrible conditions, and I'm wondering, was there a real surge of people getting their properties sold early on in this sort of cycle because people after that period of time of no growth saw price movement and said, that's it, now is the time to get out? Or have we not seen that early on and we literally got people that potentially would be selling or would want to sell in Perth, but they're perhaps thinking, well, this this roller coaster's got a way to go before it's anywhere near the peak. I mean, any thoughts on that?
Look, I think Perth's an interesting one because we never have really seen over the last couple of years much of a surge in the number of properties coming to the market in Perth. It's been very low really since about 2020. We have seen, just looking at the data now, so new listings are marginally higher than they were a year ago. They're a little bit higher now than the longer term average, but the total amount of stock on the market is extremely low. So how I look at it is I compare things to last year. So total listings in Perth are down 19.7% from a year ago.
Wow.
If we look at the August average, over the 5 years from 2018 to 2022, the number of properties on the market in Perth is down 46.1%. So when I speak
underpinning the growth, then, isn't it?
Exactly. So
Yeah.
when I speak to our team over there, the feedback they get is, we know we can sell our property, but there's nothing else to buy. So where am I going to move to? And it kind of becomes a self-fulfilling prophecy. But what I would say is I remember kind of 24 months ago, people were saying the same thing in Sydney and Melbourne. And then all of a sudden, there just seemed to be a bit of a circuit breaker where people thought interest rates had peaked and said, okay, now it's time to get on with it. But we just haven't had that in Perth. I think the other thing in Perth is you're seeing a huge amount of investors buying up in Perth as well. I think investor lending in WA is up 96% in terms of value from where it was 12 months ago. So, if you've got a lot of investors in the market, they're not having to sell anything. They're not necessarily having to sell anything locally.
Although also, I mean, if you compare that to, say, the Brisbane unit market, a lot of Brisbane unit owners were investors and they've taken advantage of a surge in prices to get out after, 10-year doldrums. Whereas if you're an owner-occupier in Perth, like you say, you're not going to suddenly bail and suddenly grab a windfall if you've got to trade up and you can't find something. So that does makes a lot of sense to me.
Yeah, and you're trading up in a really tricky market to actually secure something else. So I think for a lot of people at the moment, it's just too hard. It's just keep riding the wave. But as you said, prices went nowhere in Perth for 10 or 15 years. I would definitely have that in the back of my mind. We've got this huge surge now, but what comes after this surge?
Yeah, and who's buying? It always worries me when it's mostly investors that are driving something.
Cameron, obviously, low listings ain't great for REA, right? That's you'd love Perth listings to be up 50% rather than it was 5 years ago. And obviously, over longer term, if you look back 10 years ago, right, that was pretty good for REA, right? The amount of listings of people were transacting properties much higher, right? How does REA feel around the turnover rate of property dropping as a percentage as a country and people living in their homes for longer? And have you guys done much research on that? Because it's obviously a big discussion point for you must internally when you forecast listing numbers in the future long term. What's REA's thoughts on that long term?
Yeah, it's definitely something we look at. Obviously, our customers are predominantly real estate agents and we're driven by listings. Now, our two biggest markets are New South Wales and Victoria, and those markets are quite strong at the moment. So it's obviously positive for our business. And, we do tend to have high yielding customers in those markets as well. So the strength in Sydney and Melbourne is certainly really positive for us at the moment. And if you had a weaker Sydney and Melbourne, but a stronger Western Australia, Queensland and South Australia, that probably wouldn't be enough to offset a weaker market in New South Wales and Victoria. I guess our market's kind of double-sided because we also advertise new homes. Now, it's a different pricing model and everything like that. But whilst we're seeing a big surge in established properties in New South Wales and Victoria, we're seeing a lot fewer new developments come to site. And it's really a mixed bag. So in Victoria, it's really hard to sell new homes, whether it's a new apartment or a new house and land. Whereas in Queensland and WA, the projects are selling out really quickly. So we might not even end up getting that advertised on our site at all because there's such pent-up demand for that stock that those projects are selling out without ever having to advertise on our site. So I guess when you've got the established market going well, that can be positive for that part of our business. But when you've got the developer side of the business going well, but not too well, and people are advertising a lot, that's positive for our business. And we've obviously got the geographic mix. I mean, we would love lots of listings around the country all the time, but we also know that that's realistically not going to happen.
Yeah, I just more think about the research behind just the structural. I mean, the green competitor of yours did some research that I did love, right? It showed basically that we're living in our homes. You know, it was 7 years, now it's 14 years. And, you know, REA must be looking at that as a business and going, not the domain research, but the turnover rate of property. And, you know, like obviously we're living in our homes longer and longer. And, you know, have you got any sort of thoughts on why that is? And, you know, is it going to keep on going that way?
Yeah, it's an interesting question because, I mean, there's actually two ways to kind of look at that turnover rate. And what we deem sort of hold period is looking at basically what's sold over the last 12 months and looking at the difference between that sale date and the previous sale date. And I think we've got the same metric. It's about 12, 13 years. It's a bit lower for units, a bit higher for houses. But the other way to look at it is having a look at how many properties there are in the total market and then having a look at how many sales you're getting every year. And based on that, about 5% of stock turns over in any given year. So it's a bit of a different result to the hold period. The hold period will give you 12, 13 years. But based on that 5%, obviously that's 20 years for a property typically to sell. And that's been pretty stable for about the last 15 years or so. So I think what you find when you look at that hold period metric is there's definitely certain stock that sells on a more regular basis. And when you delve down into the suburbs and the areas, particularly in a lot of new housing estates, you see a lot faster turnover there. Whereas in the established blue chip areas of cities, you tend to find that properties are held onto a lot longer. But I think for us, we kind of know that it's going to take about 20 years for everything to come onto the market. You're going to get about 5% of stock being advertised for sale in any given year.
That's interesting because, that really does. Yeah, I mean, with the first-time buyers, that does make a lot of sense. And investors, right, and the apartment market. So while people are living in their homes and their houses for the longer term, when they get into that family stage, you know you're going to consistently get a lot of turnover with the first-home buyer or the house and land package and decides to upgrade, or the investors coming in and out. So that gives you a lot of confidence that, yes, people are living in their homes longer, but we've still got a lot of people turning over property. But that does show that suburbs are still getting more tightly held, though, right? So, you know, when it's getting harder and harder to get into these suburbs because people are still selling less, you know? Yeah,
exactly right. And I think, you know, there's obviously at the moment a really big push for more density in inner city areas. And, you know, we know that in a lot of areas, people don't necessarily want that. So that might encourage them to be less inclined to sell. But also it makes houses in these areas more sought after, and they'll be even more tightly held, because over time, if we do get more density in these inner city areas, a detached house is going to be increasingly rare and more sought after.
And so, this is where my little spidey senses are going off when you're talking about that you've got certain areas where properties are transacting more often. Have you ever done any work to sort of look at forget the transaction cost for a minute, in terms of just the capital growth of those types of areas or stock types or whatever? Is there have you done any research on that to sort of look at, well, what's a better asset?
Oh, look, I haven't recently. I mean, as I said, we do look at it, and you can see that generally the areas with the shortest hold period are new housing estates and areas like growth areas on the outskirts of the city. In terms of the capital growth, I mean, what happens in a lot of those areas, you go in and you buy a house early on in the new development, and especially if it's a big master planned community or it's a big area where there's lots of development, every developer is bumping up their price a little bit every time there's a new stage or every time there's a new project. So you are getting some capital growth, but you're probably not getting the same sort of capital growth in, you know, Box Hill in Sydney as opposed to owning a house in Vaucluse or Bellevue Hill in Sydney.
No, but that just because the developer jacks up the price of the next release doesn't actually mean that if you sell yours, you're going to get the same money as the brand new one in the next release. So even what you just talked about there, that in terms of data, it says that their values are going up, but the actual reality is if they tried to sell or when they go to sell, it might be a different story. So I'm always interested to see if there's some any research being done on that. So
yeah, or maybe it's something we can have a look at.
You're probably not even interested in that. Not in the way I am. I can understand.
I'm on a personal mission to help more people make better property decisions, and you can find out all about what I'm working on at veronicamorgan.com.au. There you will find resources for first home buyers, details about my buyer's agent mentoring program, information about my newest project, Preferential, proactive property management in Sydney, or if you're looking to buy your dream home or investment property in Sydney's inner west, eastern suburbs or lower North Shore, you can connect with my team at Good Deeds Property Buyers. And if you'd like a 30% discount plus free postage for my book Auction Ready, How to Buy Property at Auction Even Though You're Scared Shitless, and yes, I'm a potty mouth, use the code ELEPHANT at the checkout.
If you're looking to buy your first home, thinking of upgrading to a new home, or purchasing an investment property anywhere in Australia, we would love to carefully guide you through this journey and importantly get the finance right. Please reach out to myself and the team at flintgroup.au.
Well, but like from your position though, from all the work that you've done, what are the key factors that contribute to the established dwelling price movements, whether they be up or down? What are the things other over and above just, supply and obviously interest rates, because that's not the key driver?
Yeah, look, supply and interest rates are probably the two main ones. Obviously, in some of the more desirable areas, scarcity as well is obviously a really key driver. In terms of interest rates, you've also got borrowing capacity. So we know at the moment there's still the 3% serviceability buffer. That's knocking quite a lot of people that do want to buy out of the market. You've also got just when you go to a lender and you try and borrow now, the questions that you get asked are a lot more intrusive. And we know banks are looking at things like, are you planning to have a family? Are your kids going to private schools? So all of these factors also play into that. But in terms of what drives price, where we are in the cycle, economic conditions. I mean, I think everyone is a little bit surprised even now how strong price growth still is, given that interest rates are the highest they've been in 12 years. All the common knowledge, all the common belief is as interest rates go up, borrowing capacities fall and prices shouldn't rise or they should fall moderately. But that's certainly not the case at the moment. And I think it generally comes down to the willingness to people to sell, but also, yes, interest rates have gone up, but people have got so much equity in their properties now. And we know particularly that downsizer market has been really active. And if you're moving, from a $3 million house in Sydney to a $2 million unit, you may have totally cleared your debt. You may not need any finance at all. I think also the population's becoming a lot more mobile. We know that during the pandemic, a lot of people left places like Melbourne and Sydney and moved to coastal areas. So I live in Brisbane. If I'd love to have a house on the Gold Coast or the Sunshine Coast, but it's really expensive. But again, if you've sold out of Sydney and you're in a blue chip area of Sydney, you might have got $3 or $4 million for your house, and you're buying at $1.5 to $2 million. Again, probably completely cleared all your debt, and you're buying in a way that locals can't really compete with that. They don't have that same capacity to pay those prices that people moving from interstate do. And I think that's, especially in terms of people moving regionally, this has been a really tricky part of it, because the people that are moving have got a lot of wealth and they just outbid all of those locals that want to try and buy in that market as well.
Is that still happening? Are you seeing it in the activity on REA, on realestate.com.au? Are you seeing that inquiry? Because you can what's it called? Something.
Geotag,
anyway.
yes.
That's it. You can geotag people, so you know where they are now and where they're looking. Has that changed, that interest in relocating?
It's eased off a little bit, but it's certainly not back to sort of where it was pre-pandemic. So we are still seeing, a large volume of people looking to make that move. Not 2021, 2022, that movement was huge. It has pulled back, but it's settled at a level much higher than it was pre-pandemic. So we're still seeing a lot of interest.
Even that's interesting because the pandemic sort of migration out of the cities was very much triggered, I think, by a latent demand, a latent desire, if you like, and then all of a sudden it's like, here's the circumstances, now's the time. So the fact that you've still got more people actually actively playing with the idea online, that sort of, for the next pandemic we get, then I think we should brace ourselves, right?
I think it's also, we've kind of settled into a sort of, for people working, we now have some certainty about what that's going to look like. Now, we know some businesses are telling people they've got to be back in the office 5 days a week. Then there's other businesses that are hybrid. So if you're hybrid, 2 days in the office, in Queensland, you can live on the Gold Coast or Sunshine Coast. If you're in Sydney, you can live in Wollongong, you can live in the Central Coast. Yes, I wouldn't want to do that commute every day, but if it's 2 days a week, it's all right. And then in Melbourne, Geelong, Bendigo, Ballarat, they're all commutable if you're only doing it a couple of days a week. But I also think the other type of commuting is, I live on the Gold Coast, I have that Sydney job or I have that Melbourne job. I jump on a plane Monday morning, I go and work in Sydney or Melbourne for 2 or 3 days, and then I fly back. And I think there's probably a lot more of that going on these days as well. It's not just that I have a Melbourne job, so if I want to move to the beach, I've got to be down the surf coast. I can be on the Gold Coast, I can be on the Sunshine Coast. Some of the other regional markets may be a little bit more difficult because you don't have the airport infrastructure to do that. But certainly here in southeast Queensland, there seems to be quite a bit of that going on.
So that's why the plane tickets are still expensive.
I mean, we've seen that, to be honest, a lot of people coming back to the cities. I think our clients are absolutely trying to hug the capital city more, but they're absolutely getting pushed out because of budget. And so they go looking around what they can do, get for their budget in around the capital city, let's say Sydney, and they're like, oh, actually, I don't really want to move up the coast, but because work is more than I expected in the office and it feels a bit risky, but it's actually my only option. And I think particularly because budgets are just so tight and prices have gone up, even though borrowing capacity has fallen so much. But are you seeing that with, it's all about your search data. I'd just love to be, if I could get a password or something, if you don't mind, just to get me access to the data pool. But are you seeing that naturally where, the search used to be like your bell curve was, 20 or 30% higher than it was, say 2 or 3 years ago? Because it would make sense, right? That, yes, borrowing capacities have come down, but it doesn't mean the buyers have disappeared, right? They've just had to readjust their budgets. And so when they readjust their budgets, they're, hey, I'm not buying at 2, I'm looking at 1.7, or I was looking at 1.5, now it's 1.2, or 1.2 to 900. So really the bell curve should have shifted, not as much as borrowing capacity, because people are then gaining a bit of intergenerational wealth to offset that. So is that what you see internally, where the search is there, they're just changing the metrics and the maximums to suit their new budgets? Yeah,
they're changing their parameters. I think they're not being as specific on their searches. Yes, they want to live in suburb X, but the reality is they're not going to get there, and they might not get to the one next to it. They'll keep an eye on that suburb, but they will branch out a little bit further. We also do a lot of consumer research at REA, and we know that people are now looking. So we ask questions around things like, compared to where you live now, how far would you consider moving? And over the last couple of years, we've seen that people are considering moving further away.
Oh, absolutely.
And again, I think that's being driven not out of want or desire, but more out of necessity. We're also, interestingly, really seeing this in the rental market at the moment. When we look at our rental data, when we look at rental growth, when we look at rental inquiries, you would probably, think in Sydney, for example, your strongest rental growth and your strongest inquiries in the inner west, or it's in the northern beaches or the eastern suburbs. Where we're actually seeing the strongest rental inquiry and rental price growth at the moment is in the southwest. It's in the Blue Mountains. It's in the outer southwest as well. In Victoria, So you would think it's the inner suburbs of Melbourne. It's actually the southeast of Melbourne where we're seeing, and the outer east of Melbourne where we're seeing the strongest rental growth and inquiry. And in Brisbane, it's places like Ipswich and Logan Bow Desert. And I would say that's probably not aspirationally where you want to live as a renter, but I think out of the high cost of renting, it's pushing people further away from the city centre into those markets just because that's all they can afford.
Well, that makes perfect sense. And it's the tide, isn't it? It's the ripple effect, right? So this is just the next best thing. They keep going further and further afield until they can find something that they can afford. And then they'll come back in once things shift. Who knows when that will be.
Yeah.
That is interesting, though, because there has been some data that's come out recently that rental price growth has slowed considerably, seems to be across the board. Have you seen demand online fall?
We have started to see demand fall as well. Now, what's driving that? I know the federal government's talking a lot about student caps, but if you look at temporary student visa arrivals, they've been falling for about 12 months anyway. So there has been a big pullback in those temporary student numbers coming into the country.
But I also ask how many, rental properties do students really take off the market?
Yeah, look, I obviously there's student accommodation at universities. I think the Property Council said it's 4%. I think the Department of Education said it's about 7%.
Right.
One thing we also know is, though, that people are starting to go more and more back into share houses. So one of the businesses that we own is a website called flatmates.com.au. And for the last 18 months, we've seen a massive surge in people signing up to that website. Now, unless you're a uni student, you're probably not really wanting to go back into a share house. But I think for a lot of people, out of necessity, they're either going back into a share house or if they've got a spare bedroom, looking at a way that they can rent that out. And I think this really speaks to the fact that the cost of everything's gone up, interest rates have gone up, but rents are growing at a faster pace than the cost of everything else. So, something's got to give at some point. And how do you respond to that? You move to a smaller property, you take on a roommate, or you move further away than where you really like to be renting.
Or if you bring more renters into the house, then that just props up rental prices.
Yeah, it does. It does. But that's. I mean, if you look in Sydney, for example, I think the median house rent in the eastern suburbs now is like $1,500 a week, and people just can't afford that. It's just.
I'm astounded, actually. I mean, I've mentioned it in the podcast before, but I've got a new business called Preferential, and so we've actually just gone into property management, and I'm actually really astounded at even though I help investors buy properties, now that I'm actually, and I'm not on the operational side of things, but now that we're sort of dealing more with tenants, it's dawning on me that, wow, these people have to have a high disposable income to be able to afford really quite basic, like when I mean basic, they're nice apartments, for example, but they're not big.
Yeah.
And you think that's a lot of money. And it does astound me that that's sustainable. What do you think is, because I guess the affordability of a rental property, like you talked about, how do you make it more affordable? You move further away, you get something smaller, or you get more people in. It's always capped, or it's constrained, isn't it, by incomes in a way that property prices, in terms of sale prices, aren't.
Yeah, I think people are getting tapped out, and I think that there probably is now. I've seen examples of it in certain sort of more desirable areas that some properties are proving quite difficult to rent. And obviously, from a landlord's perspective, we know that interest charges on investment properties have gone up massively since the start of the pandemic. So it's not as if people are recouping all of that increase in cost, but people just don't have the capacity to keep paying 10, 15% more in rent every single year. And pretty much everywhere we have seen that the annual rate of rental growth now this year is lower than it was last year. And I think we'll continue to see that. And I think especially as interest rates fall, I think more first home buyers, more people that are sort of at that higher income level will be going, well, you know what, I want to get out of renting, and yes, it's going to cost me more, but interest rates are on their way down, and I'm going to try and get my own property. Now, you're probably not going to be living in the same suburb that you're renting in, but I think people will be prepared to pay that premium to get that security of tenancy they just don't have in the rental market.
Just on that, Cameron, I mean, you would be able to see just with some data matching, right, going, this property was listed on our portal for rent 12 months ago or in the last 3 or 4 years. Now it's on a listing for sale. So, and then you'd be able to correlate that and go, it's highly likely this is an investment property.
Yes.
And are you able to see that there's been a massive increase in that type of listing over the last couple of years? Because that's really the suction out of the market of our investors, right? And that's our rental supply. And, you know, rates staying, even if rates cuts do happen, like you said, rents aren't going to consistently keep going up because it's an affordability problem. It's also good news, to be honest, because that means our inflation figures aren't going to be as strong, right? And that means we're going to get rate cuts. So luckily that's happening, because if it wasn't happening, it's going to delay rate cuts. But investors can't hold on because they're still going to be paying 5 or 4.5% mortgages on their homes, and the investment properties are still neutrally or negatively geared. And so I do think you're going to see a lot of investors consistently bail over the next couple of years. Have you seen a massive increase there? You know, that's...
So the share of new listings coming to the market that we kind of identify as former rental properties has been elevated right throughout the pandemic. It's been at about 35% of new listings. Now, in a lot of areas, it's started to pull back a little bit. It hasn't really pulled back in Sydney or in Melbourne. Now, we know in Melbourne, obviously the state government there's ramped up taxes on investors, and that's probably encouraging people to bail. But it's still quite high in Sydney as well. And again, I wonder if that's just people are tapped out, you know, because you're paying a lot more for an investment property in Sydney in the first place, and you just got those very high interest rates. I think the other thing with the rental market that's probably not spoken about so much is what's happening in new housing. So when we look at what's being built at the moment, I'm mainly talking about apartments. Most of the new apartments are large two bedrooms, large 3 bedrooms, targeted at that owner-occupier segment of the market. So when you go back to 2017, 2018, when we were building a huge number of apartments, a lot of it was 1 bedroom, 2 bedroom stock. It was sold to an investor. And once that building was completed, say it was 400 apartments, you know, you'd probably get another 250, 300 apartments coming into the rental pool. Now, the apartment building's 120 apartments, and you may be getting 5 or 6 coming into the rental market. So that rental pool of stock is just not growing at a very fast pace at the moment.
That's really interesting, because pre-COVID, the rents were under quite a lot of pressure in inner Sydney. And I was talking to a number of property managers, particularly over in the east, and this really surprised me. They were saying that rents were, you know, considerably down. I know my own investment properties, I took rental cuts basically in that period of time. And I was told that because there was a lot of new development over in Mascot, a lot of brand new apartments, you know, some of them city views, quite, you know, and they hit the market all at one time, and they sucked demand out of places as far as Bondi. Which amazed me. I thought, no, why would someone who was looking previously in Bondi go to Mascot?
It's a bit of a different vibe.
Yeah, totally different vibe. But yeah, and this is something I heard from a lot of different property managers, inner west across to the eastern suburbs actually, that said a similar thing, that's where a lot of the tenant demand was going. And look, you know, I'm not sure if you remember that period of time. I'm not sure if you were paying attention to that inquiry, but is that the sort of thing that can happen, that it can really take, tenant demand away from more established areas?
Yeah, it definitely can. And I think it's, you know, renters obviously aspirationally want to live somewhere. And I think a lot of people in Sydney would love to live in Bondi. But if there's no choices there, you've got to go somewhere else. And again, if it gets too expensive, you've got to go somewhere else as well. And I guess Mascot, yes, there's a critical mass of people there. You are pretty close to the city. There's good public transport there, so I can understand why that would happen. But, you know, look at now, there's very little investor stock being built. There's very little new homes being bought by investors. And, you know, when we talk to property developers, they basically say that 1 and 2 bedroom stock just doesn't stack up for us at the moment. The only thing that is actually profitable for us is that downsizer market. So, you know, when we talk about needing new housing supply, I mean, from a developer's perspective, it's still got to stack up. There's still got to be sufficient profit margin there. And, the higher interest rates are certainly playing a part here, because a lot of the projects that are now being built, the developers bought those sites at the top of the market, and they paid a very pretty penny for it, and it just doesn't stack up at anything other than high end, downsizer stock.
So, and this leads into some other conversations we've been having around rezoning of sites to allow for, higher density. And then if the developer's thinking, well, it actually stacks up to create more for the downsizer market, it's not really going to bring on lots and lots of new housing stock.
No.
That their governments or our councils may have been anticipating, certainly if they're putting more 3-bedders in there rather than 1s and 2s. Which we would argue that one of the reasons why that's probably profitable for them at the moment is there's been such a lack of development, particularly in Sydney anyway, of good quality 3 bedrooms for a long time.
Yes.
Because the 1s and 2s being sold off to investors was stacking up more for them. So it's quite an interesting turn, and I hadn't realised that.
Yeah, I mean, it's all cyclical, right? And I think once we start to get interest rates coming down, these projects will become more viable again, especially if APRA taps, removes some of these serviceability buffers and allows more people to come into the market, then it does become more viable. I mean,
if they take negative gearing away from established properties, perhaps that'll certainly push investors that way.
But again, I think it's really variable city to city. So, for example, in Melbourne, even once interest rates come down, because prices in the established market are falling, you've got this massive gap between new and existing homes. So it's a really difficult sell. Whereas you go to Perth or Brisbane and established prices have risen quite a lot, that gap is not as large. So again, once interest rates come down, prices have continued to rise. It doesn't look like that much of a jump to go to a new property. Whereas Melbourne, and maybe even to some extent Sydney, where you've seen softer price growth, it is quite a premium. And I think it's hard to get people to justify paying that premium for the new property, especially when there's a lot of established properties on the market.
Cameron, at REA, is there any exciting things you can share that you're working towards with, consumer-friendly sort of buyer products or market, search tools? Is there anything that's coming down the line that you can share that REA are working on?
We've actually just this week started. There's a big project internally to reimagine our listings experience on our website and on our app. So if you do go into our app, you'll see that the listing has been reimagined. There's more advertising, I guess, for the real estate customers. But if you click on the photos, it comes out on a whole reel. So the way it's always worked is you have to keep swiping to see. Now you can actually see a whole collection of the photos and go and look individually at those. It's also going to have, I don't think it's gone live yet, but there's going to be some tagging in there to tell you what is in that photo and what sort of appliances are in there. And at the moment, there's a big project internally to completely reimagine our listing experience. So this is the first rollout of quite a few that are going to come over the next few years. So it's pretty exciting because nothing's really changed much in listings ever since the site was launched.
Except the price.
Except the price, yes.
The cost.
Yes, so I think that's probably the most exciting things in terms of the research side of things. I think there's some things I probably can't talk about too much yet, but there's some things we're looking at doing. Again, just measuring buyer demand in a bit better way, kind of getting a better feel for a really good indicator. Now, our real estate customers are really focused on inquiry, but we have found that inquiry is not necessarily the best indicator of someone's intention. Like in a lot of instances, people can just be inquiring to say, hey, what's the price? Or, hey, when's the open for inspection? You haven't put that on the listing.
Yeah.
So we're trying to get better ways to measure that those buyers that do have very high intent. And a lot of that actually has to do with how long people spend on site, how many times they view photos and how many times they keep coming back to the listing.
Yeah, it's a good point because, the agents that don't put any information on there, well, they force you to inquire. So, but that doesn't necessarily mean that that's a better listing. So it is a very good point. The weakness in using that as a measurement. Yeah, I'm sort of interested, I guess, because then that encourages you to gamify, I guess, the whole experience of looking at listings, doesn't it? Because that's going to get someone in there longer.
Yeah, and I think that's, I mean, I wouldn't say that's what we're trying to do, but we want people deeper engaging with our site. I mean, I think that's any listing portal would try to do that, but also, you know, we have people that are registered users, and you know, we suggest properties to them, so we want to understand what they like and what they dislike, so we can better recommend properties. And you know, I talked about before that people are looking in wider search areas, so it's not a case of just saying, oh, this property in this suburb that you're looking at's the one you want, because people might be considering another suburb 5-10 kilometres away. They may not have even thought about another suburb on the other side of the river or the other side of the harbour, but the property might be just right for them. So it's about being able to do that as well.
Have you got a property dumbo for us, Cameron? Or...
No, my sister's just bought a house, but she's been looking for about a year and a half. But I think she bought pretty well. So she bought in Melbourne. And I guess for your listeners, like, I think Melbourne is very cheap at the moment. I think if the government wasn't trying to drive away investors, I think a lot of people would be buying in Melbourne at the moment, because we know that compared to the other capital cities, it's starting to look really affordable.
Well, actually, on that, I was going to ask you a question earlier, because, of course, the PIPA annual property investor sentiment survey, the results came out a few weeks back, or by the time we go to live with this, a few weeks back, and they show that the top two cities that investors considered to be good places to invest were Perth and Melbourne, which are like at two ends of the continuum. Have you seen that same sort of sentiment reflected in your interest, you know, your user activity online, or is that literally just existing investors being a bit, maybe some of them being a bit contrarian?
I think it's probably a bit contrarian. We're certainly not seeing a lot of investor activity in Melbourne or Victoria. We're seeing heaps in WA, but I think a lot of people are thinking about Melbourne. The thing scaring them off is, what's my land tax bill going to be if I buy a property in Melbourne? But and you know, people are saying, well, the government will change, maybe that policy will change, but obviously the Victorian government is in a lot of debt, and they need to find a way to repay that debt. And you know, governments of all stripes like to slug taxes on property owners.
Very true. Very true. Cameron, it's been great chatting with you, and thank you so much for coming back on to the Elephant in the Room. I think that we don't want to leave it so long next time.
No, definitely not.
Thank you, Cameron.
Thanks for having me.
If you have a question that you'd like us to answer in an upcoming Q&A episode, you can send us a voicemail or written question via the website, theelephantintheroom.com.au, or you can email us directly at questions@theelephantintheroom.com.au. If you like what you're hearing, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars would be great. I know that sounds a bit cringy, but we have it on good authority that every review helps make it easier for other people to find out about us and hear what our amazing guests have to say.